4th regular meeting of the Board of Estimate and Taxation. We'll begin with a roll call.
Mayor Rilling.
Here.
Mr. Abrams.
Here.
Ms. Brown. Chairman Camacho.
Here.
Mr. Frere.
Here.
Mr. Jelleret.
Here.
Mr. Kasimis. You have 5 present at the moment and you have a quorum.
Okay, fair enough. So we'll proceed with the first item on the agenda, which is approval of the minutes of the August 3rd, 2020 regular meeting. Is there a motion?
So moved.
All right, the item is moved. Are there any proposed changes to the minutes, additions, deletions?
Yeah, on page 4, on the bottom of page 4, it's just a typo. The last sentence says she said she can provide. It should be more. It's missing an M. I mean,
Oh, more, okay. As opposed to providing or.
right.
Okay, so is there anything else? All right. All in favor of approving the minutes as amended, signify by saying aye.
Aye.
Opposed, abstentions, so the motion carries. The minutes are approved unanimously. The second item on the agenda is the appropriations, the special appropriations agenda, of which there are none. So we go to the transfer agenda, and there are a couple of transfer items, I believe, section D. Hi, Mr. Dakowitz, how are you? Would you care to elaborate on the transfers?
These are the transfer items?
Yes. There's one.
I think Angela may have more detailed information on the specific items.
Yeah, there's basically one item is transfer from the medical, dental, and vet account to the water account. And this is a $41,000 transfer, which is needed to cover the cost of 589 hydrants at $84 a piece, paid to the South Norwalk Electric and Water. This is account 01-3120-5251, which has a surplus of $83,264.
Okay. Angela, would you like to comment on that?
Oh, I can. Look, oh, there you go. She's
You're
on mute.
muted. You may want to unmute.
Angela, would you unmute?
Hi, okay. The host had to unmute me. I had to dial in today. I'm in the office.
Right.
This is, Chief Gatto sent me an email. You'll see it on the next page. And this is because they don't get advance notice of rate changes, so it's difficult for them to budget. But they do have budget in their medical, dental, veterinary account that they have not used, so they can shore up that deficit with this transfer.
Okay. All right. Are there any questions?
You need a motion?
Oh, yeah, sorry. A motion to consider that transfer. I guess there was another transfer as well, but we'll just do them one at a time.
So moved.
All right, it's been moved by Ed. Is there a discussion? No discussion. All in favor of approving the transfer item as proposed?
Aye. Aye. Aye.
Opposed? No opposition. The transfer item is approved. The next, there is, I believe, one other transfer item, two other transfer items. One from the law department, I'm sorry, one from the library for $38,044, and one from DPW for $48,859.
I think these were from last time.
They were? Oh, 8/4/20. Oh, the 8/4/20 meeting. Okay. Okay. So there was really only one on the agenda this time. All right. And the board, yeah, the board approved that. Okay, fair enough. So that pretty much takes care of I guess, the action items on the agenda. The next item is, I guess.
Thank you.
Yes, thank you, Mr. Dakowitz. The next item on the agenda is, I guess, a financial summary from Oak Hills.
Yes, I did ask Oak Hills if they would come to the next meeting, the October meeting. They will present their budget, their next year budget, and they are doing much better this year with a combination of managing expenses better, and they had some special programs this year. I'm sure you're all aware of their annual pass. And also I was talking with Chitsime, our comptroller today, and the budgeted repayment of the loan was estimated at $7,000 a month. And the last payment we received from them was a little over $13,000 a month. So that would be very nice if they can continue throughout the rest of the year.
That's great.
How much is the principal that's on that debt?
I don't have the exact amount. It was approximately, if I remember correctly, $2 million.
And there's no interest on it, right?
Yeah, it was
Yeah, no,
negotiated down to 0 last year, yeah. Yeah, the numbers are, I play there quite often this summer. The course is in great shape. The restaurant, I've been to the restaurant a number of times. I believe that's all going pretty well. And I look forward to seeing the budget, Angela. Thank you.
All right.
Maybe before the end of the season, I'll get to play one game there. I haven't played golf all year.
I haven't either. Maybe we
Wow.
can get together. Or maybe instead of no, actually that's next year. Instead of going out for a drink after the budget is over, we could play a round of golf, but I guess that would be in the winter, so that couldn't happen.
It's kind of hard to play nighttime golf.
Yeah. Is there
Well,
anything else?
if you have a drink in your hand, it might be work.
Yeah, you get the ball and you get
It
those
only
gold balls.
improved my game, gentlemen. It has only
That's right,
improved my
that's
game.
right. Okay.
All right. Is there anything else? There's some salary accounts, but is that?
Can we get an update on any surplus that we had at the end of the year? Every month we talk about that, and we're almost to the end, or we're 3 months in already. So how did that all come out?
Let me, I'll try to handle that.
You did a good job at the staff meeting this morning, Henry. You can do the same thing now.
Man, if only that were on Zoom. Municipal accounting and governmental accounting is a little bit unique. It's called the modified accrual basis. So June 30 is our year end. We keep the books open for 60 days, during which time, if cash is received, revenue is only recognized when it's received, and expense is only recognized when the cash is dispersed. That's why it's modified accrual. That's really cash basis accounting. It's very conservative. So what we do in government is June 30th, we have a sense of where we are. We keep the books open for 2 months, and we let some of that stuff sort out. And we start the audit officially in July, and they're not going to finish until December 31st. But by now, since the books are closed and we're sorting through the transactions, we get a preliminary view, but it's unaudited. And the audits generally, my experience here at Norwalk, there might be modest modifications, entries that weren't made, they're certainly not material and significant. I don't expect anything significant. Angela has looked closely at these numbers. What we anticipate, I'll put it into two parts. We expect that our expenses were less than $1 million over what we planned. Okay, so call it a deficit of about no more than $1 million, less than $1 million. But that's before we take into account that when we planned the budget, we expected to draw down fund balance of $6 million. That excludes that $6 million drawdown. So revenue shortfalls and expense overages were less than $1 million, and we didn't need the $6 million drawdown. So we will use one of the $6 million for the less than $1 million shortage, and $5 million goes back into the fund balance. So think of it as, I'll throw around the word, a surplus of $5 million, if you would, based on the balanced budget that we projected. Now, another feather in our cap. That includes the expenses, I call them hits, the hits to our budget from COVID. Hits come in two forms: revenue shortfall or expense overage. Each of those was about $2 million. It's split with the Board of Ed. The expense, the revenue shortfalls on the city side were parks and rec fees, and also the fees that we get for building inspections and other things like that, where we get fees and revenue. On the Board of Ed side, and for us, it was about 1.2, 1.3 million. The revenue shortfall on the Board of Ed side was primarily lunches and meals that are purchased. Call that 800,000. So together, $2 million of a hit on revenue shortfalls. That is not reimbursed by anyone, FEMA, the state, it's just a hit. We have about $2 million of expense overages, far more on the Board of Ed side than the city. On the Board of Ed side, the cost expenses were primarily technology, okay, and some cleaning. For the city, it was primarily police overtime and maybe some other supplies, cleaning and services like that. So rough numbers, 4 million for each. Revenue shortfall, we don't get anything. And on the cost reduction, the additional cost expenditures, we were concerned because FEMA only reimburses us 75%, and their original indication was that some of the expense overages they weren't going to cover. Just today, Angela was on the phone with the state, and we've been informed that the state's CRF, Coronavirus Relief Fund, will reimburse us for those expense items that FEMA said no to. So originally, it was put it into FEMA. When FEMA turns you down, put it into us. We'll give you the 25%. Now, they're saying even if FEMA says no, we'll reimburse you. We have a deadline of September 30 to get in the expenditures, we believe, as of June 30. So because of governmental accounting, we took the hit in the last fiscal year, but the reimbursements will come into fiscal year 21. So given the fact that we had less than $1 million shortfall, and it included about $2 million of a hit with expense reimbursements, I think we're doing very, very well. That we got through fiscal year 20. We didn't have to furlough or lay anybody off. Everybody got a paycheck. And from an operational point of view, that was for about 3 months. In the last 3 months, we've asked everybody who works at home that if you don't have work in your own department, look at the website, the things that we never get around to. And sometimes we have people working for other departments that need things done. So we're trying to have everybody work and nobody miss the paycheck. Yet at the same time, from a budget, we did pretty well. So That's a testimony to you good people, the mayor, 6, 7 years of conservative budgeting, a healthy rainy day fund. It's good stuff. We come into fiscal year 21, as you know, we did 90% of the budget before COVID hit. And in that last 10%, when we look back at the budget, the mayor requested that we reduce the mill rate a bit as a benefit because there's a recession out there and people are hurting. We did that. But at the same time, we were able to beef up our reserves. We did it primarily by reducing the expected collection rate on taxes. Normally, we budget at about 98.6% and exceed it. For this coming year, we reduced it to 97.6%. And 1% of our expected taxes collected is about $3 million, probably more than that. So we added items to the budget as a buffer because we don't know what's going to happen in fiscal year 21. God forbid there should be a second wave. We might have revenue loss or expenses that we don't get reimbursed for. So we've tried to buffer this year's budget as well. The good news, the collections through the end of August were, I think, only about 10% below last year. And if you recall, normally Lisa Biaggiorelli, the tax collector, gets the bills in the mail in June. It's officially, the due date is July 1st, but there's a 30-day grace period till August 1st. And we've extended that. This was a requirement of the state. We chose this option to extend that grace period to October 1st. So we extended the normal 30 days to 90 days. So if people pay their taxes by October 1st, there's no interest, there's no penalty. There's an exclusion that fiduciaries are still required to pay by August 1st. We estimate that half of our taxes are paid by those fiduciaries, primarily banks holding mortgages. So we got a healthy amount of those monies in. We won't know for sure the cost of extending 60 days because only half the taxpayers might take advantage of that. And because interest rates have dropped since last year, we estimated that that cost of the additional 2 months would only cost us $50,000, but it would be perceived as a very nice benefit by the citizens and taxpayers. We won't be able to tell if there are any problems until October 1st, October 15th. We expect the next 2 weeks to be the rush to pay on time. And we will be communicating because if you don't pay by October 1st, the penalties are retroactive to July 1st. It's 1.5% per month. So you have the month of July, August, September, and October. You get hit with 6% penalty. So Lisa has made communication very important in the next 2 weeks. You got this grace period, but don't miss the deadline. But my expectation is that we will be okay. Let me compare City of Norwalk with other local communities across the country. As a locality in Connecticut, most of our taxes come from real estate taxes. Across the country, states and local governments are hurting if they get significant tax revenue from sales tax, income tax, tourism tax, gasoline taxes. They're hurting just in the impact of COVID. Fortunately, in this case, in Connecticut, we get 90 to 95% of our revenue from real estate taxes. Now, because of the COVID recession, commercial real estate in many areas, we get 70% of our real estate taxes from residential. So we only have the 30% vulnerability. I can tell you here in Manhattan, the number of properties that are available to sell, to lease, and the prices are declining. People are getting, this is the well-known trend of people moving from dense, concentrated cities to suburbs. We in Norwalk are benefiting from that. As Steve Kleppen and Sabrina Church explained to the rating agencies, we are benefiting because there are companies either migrating from New York or just companies in the area whose employees are working from home, but they'd like to have space, office space to get away from their home because of education or whatever. So we are getting a pickup in demand for commercial space in Norwalk. So the 70% is residential, the 30% we are doing at least flat. And my personal opinion is I've done this for decades, consulting to both individuals and businesses. When you don't have enough money, you literally look at your bills and say, what's my priority? We're in an upscale residential community. Most people's, the vast majority of their savings and investments is their home. They don't want to lose that. We're only asking for 23 mils on 70% of the market value. The market value would have to decline 95% before we don't get paid. So I think we're going to get a good collection rate. And if we don't, we'll get it in the next 2 to 3 years in tax sales. Plus, because of our liquidity, we have the cash to cover whatever expected shortfall there might be. So net bottom line, I don't want to jinx anyone, knock on wood, but I think we're okay. So the budget is protected. We haven't seen such a drastic fall off in collections so far, and I don't expect it in October, but we are monitoring it. Lisa prepares a weekly report for me comparing week by week collections with last year. I think August and September were not comparable because the deadline last year was August. October to October, actually you have to probably look at the last weeks of August with the last weeks of September because of that October 1st deadline. And we'll go from there. But I think we're doing kind of okay in that regard. The only other thing I could comment on is the long-term financing in the bond market. 4 weeks ago, August, we closed on our annual $42 million capital raise, new money. That was the limit that our financial advisor and I set because we don't want to get to more debt than would justify the AAA rating, and we don't want to put that in jeopardy. So we raised the 42 million. All 3 bond rating agencies reaffirmed our AAA bond rating, and our true interest cost, which is the standard. And we got penalized because we took 30-year debt. As you know, the first 10 or 15 years is very low, but then there's a forward increasing slope, which increases the rate. But despite a 30-year bond issue of 42 million, our TIC, true interest cost, was 1.67%. But wait, there's more. Tomorrow, we are pricing another deal. We were approached by investment bankers who said, you have bonds that are callable, that you could refinance, again, comparable to a mortgage, issue new debt at a low rate, take the proceeds and pay off your current debt. What's nice is because the taxable market is so low, we're able to do a taxable deal, issuing taxable debt to do a refunding. And the reason that's important is part of the tax reform that was done 1.5 years ago. There's a concept called advance refundings in tax-exempt debt. That's where your bonds are not yet callable, but you're allowed to borrow the money in a refunding, invest it for a while in an escrow. And then when that escrow pays off with a guaranteed interest rate, then you can pay off your refunding debt when it's callable. That advance refunding was knocked out as part of the Tax Revision Act. However, if I'm issuing taxable debt, I don't have that limitation. So rates are so low, we decided, we issued, I believe it's, the authorizing resolution was 53 million. We issued $52,950,000 of new money taxable debt, and the rates are even lower than the tax exempt. And at the same time, I took a look at the WPCA and the parking authority debt. They borrow on their own behalf. All the resolutions were authorizing it. And we don't even have to worry about reimbursement because they set rates to recapture and make sure annually they can pay for the debt service. So they need to borrow the money. We're getting them at great rates. So we're looking at a total of almost $73 million, a 20 million new money tax exempt and a $53 million taxable. We're doing it tomorrow. I had 3 or 4 pricing calls today, and I've been told our refunding savings, we take the difference in what our debt service is and we present value it to today. That savings will be in excess of $2.5 million. We expect to close noon tomorrow. So on the long-term debt, I worry about the absolute amounts, and during this year's capital budget process, we're going to re-examine all the open projects and try to manage them a little better. But from a debt point of view, the debt issuance, the market loves it. The only Connecticut paper that's been out there in the last 4, 5, 6 weeks is the town of Toland, I hope I said it right. And they're not a AAA. So AAA Connecticut paper, we look good and we're getting a great demand and we're getting great rates. So long-term, we're doing okay. Short-term and the budget, we're okay. We'll be starting the budget process the first week of October. We're sending the packages out. The mayor will issue our pro forma, and we'll go through that again with your good selves.
Great,
Sounds great.
great news.
I want to give Henry a lot of credit and Angela as well. They brought, in my opinion, a new level of professionalism to the finance function. Henry is on top of things. Angela is his right-hand person, always there, and really provides the information that we need, not only the BET, but certainly my staff, in order to make the tough decisions to try to keep our financial house in order. So Henry, thank you. And Angela, thank you for all that you do.
Thank you, Mayor.
Thank
You, the BET. I've been in other governments, and I have to say, one of my favorite things about coming to Norwalk was after 6 years of Mayor Rilling, I inherited a AAA rating and the state's largest rainy day fund. I can't thank you. That makes life a whole lot easier. But in addition, just the support, the conservatism, the knowledge and wisdom. I was taught in consulting, the better the client, the better we play. And you guys are knowledgeable. You ask the right questions and you're supportive. You come up with ideas. So it's a real team effort. So I thank Angela and Chitsame together on the financial side. I think the 3 of us do the best we can in the finance area. Then we have the support of the mayor and Leisha, which is excellent. They get it. They know how to balance finance versus operations. And then at the oversight level, your good selves, the finance committee led by Greg Burnett and the whole Common Council, it really is a great team. And I would venture to say we're probably, I don't know for sure, but probably one of the best run cities in Connecticut. And probably I put us up there with the whole country. So thank you. It makes it enjoyable. We like to work hard knowing you're going to put us through our paces, but at the end of the day, we're doing what's right for the citizens and taxpayers.
And thank you for that, Henry. And, I did leave out Chitsame only because she's not on the call. I'm looking around at the call, but she does a remarkable job as well. So we've got a good team in place. And just a side note, I know that over the years, I have particularly been under a lot of pressure to draw down our rainy day fund, giving $10 and $15 and $20 million in order to fully fund our Board of Education requests. I think we can all see right now that a day or a time like we're experiencing with COVID, not knowing what is going to be reimbursed, what our expenses are going to be, what's coming in the next 6 months, 8 months, a year. We don't know that. And it would have been a very easy thing to draw down the rainy day fund to a point where maybe we have 25 or 30 million dollars going below the threshold that we felt is a comfortable threshold in order for us to maintain that AAA bond rating. And we didn't do it. And it was, we were under a lot of criticism for it. But you know what? I think now we've kind of been vindicated, where people see that in order to get through some very tough times, and they called it a rainy day fund. Well, folks, it's really pouring right now. We're in the middle of a tsunami almost. It's good that we decided, that my team decided that we're not going to draw down the rainy day fund irresponsibly. We're going to have it so that when we do have a serious situation like we do, we'll have it there for us to fall back on. So I think that, you know, the people in Norwalk will probably appreciate that once they see where we are and where our finances are. And we're in really stable financial situation. Again, as Henry pointed out, that tomorrow we'll be refunding some bond issues, and that will save us in excess of $2.5 million. We have to take advantage of the situation as it is now and the low interest rates. So again, thanks to Henry, Angela, Chitsame, thanks to the Board of Estimate and Taxation. You know, you don't get paid very much money for serving as the watchdogs of our city finances, but you do it because you really know how important it is. And I also, as Henry mentioned, want to thank Greg Burnett and the Finance Committee of the Council, and indeed the Common Council. We have a good team in place, good watchdogs looking out for the city of Norwalk and the taxpayers.
Great.
I would just say one more point. I made a similar presentation on the Finance Committee, and I forgot to mention this because this piece of paper got buried with everything else I'm dealing with. In addition to having that rainy day fund, we have funds that we invest. We look at treasuries, CDs, municipal paper. But having said that, we have a group in Morgan Stanley out of their Boston office who has worked with us for years in managing our investments.
I think we lost you.
Yeah, we just lost him. Oh, he's
Oh,
back.
Are you back?
Yeah, you
Now you're
froze.
muted.
You're muted now, Henry.
We're just getting to the good part too.
I must
There you
I
go.
must have clicked on the wrong thing. That's how tenuous our whole finances are. But the point is that this group from Morgan Stanley has invested our funds. I'm working closely with Chitsame to get better cash flow projections, which involves both our operating expenses and our tax money and our capital expenditures for those projects and our bonded money. And we work with them to invest our intermediate to long-term funds. The short-term funds we keep in Connecticut STIF, a short-term investment fund managed by the state of Connecticut. It's safe and it's liquid. We work with a number of banks in Connecticut local. We might buy CDs, whatever. Again, we're not looking for the yield. We're looking for safety and liquidity. But we do have longer term funds. So you can go out the yield curve, maybe get a little bit more oomph. And at the same time, you might be able to manage it and be an active manager. So a month ago, August 10th, what he told me, he has $143 million of our money, or he did at that time. 11 million was funds in our insurance fund, where we have fewer restrictions, a percentage of which we can invest in equities and other things. And at that time, we were getting a 1.61% yield on our investments, okay? And I think we raised money at 1.59. So part of it is he bought securities that might have a maturity of 2 years. And as interest rates go down, we were getting that benefit. He had $75 million at 1.27% and 56 million at 1.11%. So even though the treasuries and interest rates have gone down, with good active management, we are getting better yields on our investments, despite the limitations on what we're allowed to invest in, because in those cases, liquidity is not as important as safety and yield. Safety is always number one. Short-term liquidity is number two, and then yield. Intermediate to long-term, yield precedes liquidity, but it's only based on good cash flows. I don't want to have a capital project or bills coming due that we can't pay. So we're getting a little bit more sophisticated in managing the investment side and cash balances as well. But I just wanted to alert you that now that the other parts are smooth, we can focus on this and try to pick up a little bit of yield as well. So it's just satisfying and gratifying to me to see this manager. When I inherited him, he was charging us 15 basis points on half the amount of money. And I negotiated to get it down to 10 basis points and then rewarded him by giving him more money. And he's doing a phenomenal job. So we're trying to get benefit all across the board wherever we can.
Great.
Good.
Sounds good. Anything else? Anything else going on?
Just gotta say, it makes,
Sorry,
it
Columbo
makes us
is
feel,
done. No more other questions.
well, it makes us feel, why are you looking at me? It makes us feel a lot more comfortable with you giving us the information that you're providing each week, each month, I should say. So I'm very, very comfortable, and I second everything that the mayor said.
Very good.
Great. Well, we appreciate that. And I try to, finance is an area where there are so many moving parts. And I used the priority, the budget was a big deal, the bond offerings are a big deal. And now we're getting to even more granular detail, and we're just trying to improve in each of those areas. So hopefully I don't forget to report on these things down the road, and hopefully we have equally good news as we report in the future.
Great.
Good.
Okay. There being, I don't believe anything else on the agenda. There a motion to adjourn?
I move we adjourn.
So moved. All in favor?
Aye.
All right. Thanks, guys. And thank you, Henry. That was a great presentation.
Thanks, Henry.
Thank you all.
Great job. Okay.
Have a great month.
Thank
Stay
you,
safe.
Henry. That was great.
And whoever is celebrating, Happy Jewish New Year.
You
All
too.
right.
Bye-bye.
See you guys.
Bye.
Bye, take care.
Is it over, Donna? You're on mute, sorry. Okay, perfect. Have a good night. Thank you, bye.